Hello friends, welcome back. I'm Rocky Outcrop. This is going to be a Bitcoin technical analysis video. Today is Friday the 21st of February 2020, and let's just look at all these lines here. Is it that side or that side? I don't know, one of the sides. Look at all those lines. What are they all? Well, let's explain all that and more in the charts. Dive on in. Let's roll those intros. Okay, and we're back in the charts, and you can see this is the 24-hour Bitstamp chart, Bitcoin versus US dollar, and I've got two Fibonacci's drawn in here, and this has got quite a lot of price action on it. We're going back as far as the December highs 2017 here for this one, all the way down to the December lows 2018 the following year, and the highs here in June of 2019 down to December in 2019 of that year, so that we can see these two Fibonacci's drawn on here and where the price has been interacting with them of late. And let's just zoom on a bit more on in here and see, right, so we have the price came down here to the 382 of the June to December Fibonacci, and it also came down to 382 of the 2017-18 Fibonacci as well. So those are two big areas where we're looking for support to come in and help with the price, and indeed it did. And you also have confluence if you look to the left with areas where these two lines have actually, there's no point in drawing a horizontal on top of them, just cluttering up the chart, where these two have acted as support and resistance in the past. But I do have a couple other horizontal lines there, and these help give us our sort of targets for the meantime. And of course, on the downside, like I was just pointing out, you've got 9,400s and down to the 9,200s area for that, and you've also got in the upside, just in the immediate near future, you've got the 21 moving average here, this yellow line, currently acting as resistance, as we have seen today throughout the day. So let's just see if by the end of the day we can get above there. That would be interesting. And then the next target in line, of course, is that 9,850 level, which we knew about on the way down before, back in the June to December lows. And of course, when we came up above it, we acted as resistance and then potentially looked like it could act as support, but then ultimately didn't, fail to do so, and the prices came down here to set in a new high or higher low, possibly as part of this here channel that we're potentially in. And you could have at one point drawn a wedge on here, of course, and had a measured move off of it, or you could just have been looking at the different areas of confluence that you had anyway, and where the support and resistance was coming in. And it always is telling us the same sort of story, that if you were to take a measured move from this thing, that's a little bit small perhaps, but you can see it went down past there. The measured move is probably more like that. Yeah, so it came down here in and around this line of this Fibonacci, and that's what has offered up us our support so far. So that's what we're looking at. And of course, then this here could easily just as well be a channel. If you were to have just taken that same wedge there and then flattened it out afterwards, then this could become a channel. And it really depends where exactly you want to draw these things in at, as to whether or not this is offering up any levels of support or resistance currently as the price is interacting around the bottom side of it. But of course, it's subjective, and it points more towards the psychology in this area anyway, of it being an area of decision for it, of course. And we know that from the grand picture with this Fibonacci retracement here on the 382 from the all-time highs. So we kind of know all of that anyway in our back of our heads. But what's recently happened is we've had this golden cross here. This is the 50 moving simple average, and the 200 the crossing over. The red is the 50, and we can see that in the around that period of that happening, that if we just measure from around about where roughly the tops are to roughly the bottoms, that we've had an 11% move or so down the way in price action, of course, and that is similar to what we saw in the past when we had the previous golden cross happening around April, where we had that's probably closer to actually 12% movement in price down the way. So these things are known to happen. Of course, people in the world of YouTube and analysts out there in the world who don't have any skin in the game themselves have been talking about how there's a great golden cross opportunity here for trading to the upside. And of course, well, there is in the longer term, but in the immediate term, you've got to be aware of this 10% pullback opportunity here. So the music's probably kicked in, because the video won't be over just for another minute or two here as a wrap up and take a look at what we're looking at. So if you just stay tuned to the end, and you'll get all the important info now. So we have a low here down here on the MACD and on the stochastics and the RSI, and we're looking to see whether or not here on as this is lower and is lower here as well, and potentially lower here as well, is that whether or not if this is an overall uptrend, that and we're looking at the lows, that would be hidden bullish divergence and offer us up a signal for continuation to the upside. And then if we just go down the time frames and take a look at how that's playing out, we can see that if this is an overall downwards trend, I would just hit auto, make it a bit more visible. Since over here to over here, and we've got lower highs and lower lows as part of that, then what we're looking at the end of this sequence here is that there is indeed bullish divergence coming in between the last couple of them. So if we've got classic bullish divergence there and hidden bullish divergence on the bigger time frame, I suppose we could say as well it's an uptrend, and that we're looking for things to start happening, like this here to move on out of the bearish control zone in the 4 hours, that's the RSI, and for these things to start moving up the way, and in terms of the bigger time frames, to be supported by the median line here, and around the middle line here as well, of course, and for it to turn around and come on up and try again into this area, and hopefully we can get higher highs. And then in terms of the bigger time frames, just as we come into the final moments of this video, I swear, because we'll look at CMEs in just a second here, and then it'll be over. Then we can see, and like and subscribe if you like this comment, like this content. Let me know in the comments below if you want things to be at a slower pace or quicker pace or anything else, or more detail, or if you've got questions, let me know. It's all good. So we can see here that the 50% retrace line acted as resistance for us in the past on the weekly, and we came down here and we've covered those things that we talked about. So in terms of the overall trend, though, we're looking for it to try and close above this area of our previous highs, and that's happening currently on the price, but we've got until Sunday for that. But what we have closing today, of course, is the CMEs, and on their weekly what we're looking for is the same sort of scenario to play out, for it to close above its previous body high, and for it to hopefully move up above the 382, and the 382 coming in here where the price currently is, you can see, is the same sort of setup as we have on the spot prices in terms of how those Fibonacci's are laid out. But of course this is CME, so that's the all-time highs to all-time lows, and you've got your week's worth of price action there ranging between those two areas on those Fibonacci's. So if we go down to something like the day instead, we can see how gaps quite often get formed on these charts, and we had one here as the price extended up into the 50% retrace. So we got a gap, and that was filled in the price action because we opened back up in around this price, and then that was filled in the next day or two, and it looked like the prices could be returning up towards an upwards trend, but actually we've continued to just sit in our higher low here, supported by the 21. And of course this is the range on the week, so prices down here below the 21 over the weekend will result in a gap to the upside, and prices above the 50%, or the larger term 382 on this chart will result in a gap to the downside whenever this opens back up. So that'll be interesting to keep an eye out for, and we'll see that more or less in spot prices as well. So thanks very much for tuning in, and I'll see you in more videos today. I've done Bitcoin now, so it'll be Ethereum, Tezos and Chainlink coming up today as well. So like and subscribe, let me know in the comments what you thought, and I'll see you in the next one.